Hello and welcome to the FinTech Finance Virtual Arena. And today we've got a really special episode because we're going to be learning about Pyypl, a lovely new neobank coming out from the Middle East and Africa and beyond. So joining me here today is Antti Arponen. Antti, how are you doing? You all good?
Really good. Thank you for inviting me.
Brilliant. Well, Antti, could you give us a bit of background to your role and Pyypl, please?
Sure. So my name is Antti. I'm the CEO and co-founder of a fintech called Pyypl, here based in the Middle East, Africa and Central Asia region.
Absolutely brilliant. Well, with that in mind, Antti, can I get a bit of background to why you looked to start Pyypl?
Yeah, it's funny. Many people think that it's because of the market opportunity. After all, the Middle East Africa is the world's number one underbanked region. It's the number one fastest growing e-commerce market, and it's the number one money remittance hub. And we are growing like 49% month on month. So it would be easy to think that it's because of this, but it's actually not. We started it because about 5 years ago, we come from telecom background. So we started seeing a trend that a few years ahead, there will be about 800 million people in this region who have a smartphone and internet connection, but they cannot pay online. So when they hit that screen that says, please insert your credit card number, they're stuck. And we thought that that's unreasonable. We thought it will make feel people really bad when they get stuck with something so basic that the rest of the world can do. So that's the reason we just wanted to play our part in fixing this massive problem.
Wow. I mean, yeah, it must, as you said, I think the perfect word to describe it is frustration. Just being able, having all the technology and the ability to get that far and only at the final hurdle because of the lack of financial services out there. So with that in mind, people, as you said, you focus in the Middle East, Africa, and even Central Asia. Now, I'm really interested about that last part there. What ties these markets together when it comes to finance, apart from maybe just being underbanked?
That is obviously the obvious answer, that in all of these markets, there's a lack of access to basic essential financial services. But where it gets really interesting is why that lack of access actually exists. And there's kind of two pots of companies who could fix that. One is banks, but their cost structure simply doesn't make it possible for them to extend their services to kind of low and mid-income, these emerging new market or new segments. And when it comes to non-banks, so alternatives, fintechs like us, the challenge is that it takes about 3 to 4 years to get regulatory approval to provide financial services. And then you have to do it in every single country separately. And to make things even a bit more challenging is that a lot of it is based on personal trust between the governments and regulators and the fintechs. We are in a lucky position. We started this work about 5 years ago. So if somebody didn't start it 3 years ago, they're sort of a bit late now in here. But that I would say is the number one common denominator in this region, that to fix the lack of access to services, you just need to work years and years to get there.
Yeah, it's no just kind of simple get out of jail free card. You have to keep working on it, working hard for years. I think that comes across when you look at your site and seeing all the different countries that you operate in. It shows that you really have put in that hard work. I've seen in finance, a lot of the innovation, especially in Africa, has come about from the telecom companies. And you mentioned yourself, working for a telecom company. I believe it was Virgin Mobile. Can you tell us what that gave you going into creating Pyypl?
Yeah. It's quite fundamental. It had a profound influence on two different levels. So if we go back 13 years, why we started Virgin Mobile in this region was that we saw that the incumbent telecom providers preferred the sort of high income segments and didn't bother to provide good quality service at reasonable cost to the big masses. Whereas we at Virgin, we thought that everybody should have a mobile phone, everybody should have an internet connection. And that same feeling we had 13 years ago with the telecoms, we've now had with financial services. Of course, everybody needs a payment card. So that's kind of the first fundamental reason that came from the sort of telecoms market. The second one is quite interesting, is that when we started tracking at Virgin how our users pay their mobile bills, we realized, we were actually shocked to see that those few people who do have credit cards and debit cards, those cards don't work for paying online. You can tap it in a coffee shop, wow. But trying to pay online, it just gets declined. We couldn't believe this. And therefore we thought that, and not to even mention how to get a credit card. You need to go to a branch, you need to fill in a pile of paper, you need to have a credit score, which you can't have because you're not banked yet. So we thought, okay, we're going to digitize this. So how we do things at Pyypl is our fastest new customer has onboarded. It took 53 seconds.
Wow.
We captured 260 data points. And to give a bit of flavor, we, for example, during that 53 seconds, we calculate how you feel. Are you sad? So we use the technology to the extreme to make it just so convenient. So that sort of comes from the telecoms and technology backgrounds we have.
Yeah, hearing that kind of almost a very customer-centric experience that maybe we see in other industries and not finance. And it's brilliant to be able to hear you're applying it finally to finance. With that in mind, looking kind of a future thinking question here. We've heard about all these incredible innovations in Africa when it comes to payments specifically. So what do you think mature financial payments markets can learn from, and what do you think we're actually going to start seeing in Europe that have taken from what the innovations we've seen in Africa?
Yeah, it's actually interesting. One thing that, and I'm European, so I'm guilty as charged, but what's difficult to see from the North America or Europe is that this region is entirely based on cash. So if you take a fintech from USA or Europe and try to adopt it here, actually their business model would completely fail here because they have an underlying assumption, a core pillar is that the money is paid, salaries are paid to bank accounts, and once it's in the bank, then you can start providing further services. That whole foundation is invalid here. It's just not the case. So when it comes to innovation, you actually have to innovate on a much deeper level. You can't just innovate a nice looking mobile app. You need to innovate on an infrastructure level. You need to be building that. And it sounds really daunting, but the really cool part about that is that once you work with the markets and governments to build a little bit more infrastructure, you become part of the infrastructure. And where it gets really juicy is that if you read research, it's showing that the next generation financial infrastructure layer will be more valuable than internet, cloud, and mobile all put together. So Amazon's, Apple's, you name it, it's nothing compared to the value the next financial infrastructure will deliver. So it's awesome.
It sounds absolutely amazing to hear this kind of. We've heard about how local payment methods, or LPMs, are causing payments to diverge. We're seeing incredible things in China, and to hear that because of at the infrastructure level, it's so different. We're going to see that kind of innovation diverge. I'm really excited to see what we're going to see in the future there. Well, with that in mind, we brought up earlier how maybe finance isn't typically one of the most human industries in the world. So, I mean, what does Pyypl do to try and remedy this quite significant issue?
Yeah, it's not even to us. It's not even activity that we do to paint a picture. The first thing we did before we wrote a single line of code, and we've done a lot of that, before we even started that, we wrote down our values. And we manifested some of those values. For example, our company name is Pyypl. Our logo has 2 human beings in it. The first person, who joined, Phil, our co-founder, he insisted to be called Chief Ethics Officer. How many fintechs have the number 2 guy to be an ethics guy?
Yeah.
So it's that core in our DNA. And then that drives everything we do. And yes, of course, we are a financial company and we are pretty hardcore technology guys. We're hardcore finance guys, hardcore lawyers and regulatory people. But what we really want to do is to make the people feel equal when they can pay just like everybody else. So we're not really here to solve just a payment problem. We want to contribute to the society level problems. So it is as core as it can get.
Yeah, and especially, well, we've seen within the UK at least, e-commerce has become almost critical to a lot of people's lives. Even generations that typically haven't been involved in e-commerce are now relying on it. So I imagine this is coming at a really significant time, in the future because of e-commerce. Well, if we were to continue talking about your ethics and value statement, I noticed on your site you've got the 5 Fs. Outline kind of the structure of your company and what you aim to kind of like rely on. So can you tell our viewers a bit more about that as well, please?
Yeah, exactly. It's funny because we don't even think about it. It's just in our DNA. It's the way how we work. It's our cultures. But to open it up a little bit, so we have our 5 Fs. So the first one being fair. It just means we're trying to always do the right thing towards everybody, all stakeholders. And when nobody's watching, you don't need to supervise us. We'll promise to do the right thing. The second one sounds really dry, but it's functional. But it's actually quite important because in this part of the world, the daily life can be a little bit of a struggle. So removing these functional hurdles will just allow people to spend more time on doing something they want to do. And we think functionality can bring a few smiles in people's faces. The number 3, we have the F is familiar. And this is quite important because yes, there are 1 billion smartphone owners here and 80% of them don't have payment cards. So while this is, of course, we think it's super cool, but we are talking about other people's money. And the way how they trust and the culture here is always on a personal level. So we want to be the trusted old friend, the familiar guy, not something high tech and scary. And then our number 4F is focused. And that's, interestingly, that mostly means that we put all our efforts into thinking for the best of our users, our employees, regulators, partners. So essentially to focus on people and human beings. And everything else we can automate with technology. That's why we have a PhD CTO. He can sort it out. And then the final one is the first. And the first, again, doesn't mean something really fancy to be doing things first. It means that we don't mind taking the hard path and removing obstacle after obstacle and to get things done. And if somebody else benefits by us sort of trailblazing a little bit, we're just happy about it. So those are kind of the 5 Fs we have.
I think they're absolutely brilliant. I love that. You have to say you have to be the trailblazers because you say you had to start 5 years ago, and if you didn't put in that legwork, then no one else would be able to do it. Now, the second F you also brought up was functionality and how having that kind of stable baseline is actually so important in these regions that you operate in. Now, with that in mind, a lot of fintechs start in one market and after you've got significant market share, then slowly roll out across the board. But you're in a significant number of countries in very disparate regulatory boards, everything like that. So how have you navigated the regulatory headache of operating in so many different countries and so many different cultures?
Well, we have to start by saying we don't think it's actually a headache. We may be masochists, but we actually love regulators and we love regulations. And there's a good reason. They're just trying to protect the consumer. And that's 100% aligned what we want as well. And we also need to be a bit sympathetic towards the regulators. It's extremely difficult to write up regulations around financial world. And we know it firsthand. So Phil, the other co-founder, he's worked at the most senior positions in 2 different regulators. So we understand their struggle as well. Their heart is always in the right place. It's just really, really difficult. Yeah. So with that in mind, we still decided to say that our 25-25 strategy, which is to be in 25 countries by end of 25, we said, okay, let's just do it nonetheless. And everybody thought we're crazy, but interestingly enough, we're actually on track. We might even be faster than we thought. And we don't really see anybody else having that kind of an regulatory pipeline because it's just difficult. And you need to be a little bit mentally ill to jump on this one. And then, yeah, that's it. And then, of course, another part that is so fascinating, what keeps us going is when you're in multiple countries, you start seeing these different cultures coming together. And for example, even in our own user base right now, we can identify about 20 different, completely different ways of using the Pyypl product. And we knew actually that this would become the case. So from the telecoms background, we absolutely knew that one size fits all in this region, it's doomed to fail. Yeah. So we decided to build for 4 years our own technology platform in a way that it's actually, while it looks the same, it's just an app and so on, but it's customized for every single user slightly differently. You receive slightly different notifications. You have different services depending on the country, demographics, and so on. And then we started seeing it. There's customers coming from 106 different nationalities.
That's absolutely brilliant. And it's interesting, you can look at customer experience. As you said, the telecoms viewed it as just kind of one size fits all, because you always think that just being, having good customer experience is just, everyone expects the same level. But actually, what is considered to be good customer experience in one country changes very differently. For instance, in Mexico, when you go to, or Brazil, you go to make a payment in a branch and then get the slip, compared to card usage in Europe. It's absolutely fascinating to see. With that in mind, you've already brought up some brilliant growth statistics. You've brilliant numbers in terms of the amount of customers and different terms of ways of using the product as well. But with such a huge potential customer base going forward, underbanked but high mobile phone usage, what is next for Pyypl?
Yeah, it's we're a bit boring. It's crystal clear. It has always been the same thing. So our plan has always been that 25-25. And how we reach that is that we have an every single morning, 9 a.m., all hands meeting, deciding what is it today we're going to do to get us one step closer to that. And so far we are on track. We're actually a little bit ahead of what our original plan was. We grew to give a picture, we grew 19 times from Q1 to Q4 in transaction volumes. So it's huge growth. And we sort of always joke about it. We only need to do this 1,800 mornings more and we're there.
Brilliant. Well, Antti, it's been an absolute pleasure meeting you. Thank you so much for joining us here today. I hope you've had a good time yourself.
Absolutely. Thanks so much for inviting me.
Brilliant. Well, thank you very much to all our viewers as well. You can catch the rest of the series over at www.fintechf.com and, of course, YouTube and LinkedIn. So thanks very much and see you next time.